This year might just be the right year to invest in property. But before you jump in, do you have a low-rate investment loan pre-approved? It might be the right time to invest, but the wrong loan could dent your prospects for achieving the maximum return. Are you armed with the best finance at the sharpest rate? Find out with Finny. Call us now on 1300 002 023 and find out what you could save. Or visit our website, finny.com.au to book an appointment.
This is a Momentum Media production.
Welcome to the Smart Property Investment Show, the podcast by investors for investors.
G'day, how you going? Phil Tarrant. I am the host of the Smart Property Investment Show. Hope you're well. Tuning in onto the marvels that is the internet, YouTube, wherever else you listen to this. G'day, how you going? A lot of you just usually tune in via audio, but a lot of people saying they want to see us in person. Recording the Smart Property Investment Show, so you get a sense for how's it all going. You'll see I've got some notes in front of me. It doesn't normally happen, so I'm pretty prepared today because I've got a guest in the studio who has given me some insights into some of the key areas they want to chat through. But I hope you're well. Thanks for getting involved. Remember, you can tune into us on the Property Investment Podcast Network on any podcast player, wherever you listen to it. You go and check it out. Or if you want to stay on the YouTube, we're here all the time. So we do enjoy it. Thanks for tuning in. Get stuck in. Property investment is a great asset classes for Australians to create wealth. So the fact that you're investing in your own education is a good thing. And the better educated you are as a property investor, the more informed you are about what's coming on in the market at any point in time is going to mean you can make more informed decisions. And hopefully today we're going to get stuck into that to help shape your views towards property investment, particularly in a market which is challenging, to say the least. Rising interest rates, as we all know, 9 consecutive rate rises. So it's the highest rates most Australian investors will know or remember. Pretty significant challenges facing it. But I do point out that we are probably in normal rate conditions right now. So get used to it. It's not going to go back to 0.1% official cash rate as we saw through the COVID pandemic. But we're going to stuck in today. How do you capitalise on the market? What do you do about it? What is the solution? How to get stuck in? Joining me in the studio, Sanjeev Sah is back, founder and director of Investors Dream. Sanjeev, how you going?
No, very good. Thanks, Phil. Thanks for having me.
You look too well dressed, mate. I should have put a jacket on. I feel a bit underdressed just with my what is now a creased shirt because I've been sitting down all morning. But how you going?
No, I'm good.
Yeah. What's been happening, mate? Tell us the last time we caught up. Much going on?
Yeah, I think it's been good. I think last year we caught up, and since then we have been busy buying properties, and then in December we saw some people relaxing and traveling, which was pretty much required.
Yeah.
But then back again, later January, we're seeing people are back into the market. People, again, these are the people who are educated or understand why they're looking to buy properties and what's for them. So we see, again, a lot of people back into the market, and at the bottom end, we have a good housing crisis. So that's
a good housing crisis.
Yeah.
well, glass half full, glass half empty. And I do note also this is a podcast for property investors, right? You say a good housing crisis. So you're looking at the situation we're in right now, the dynamics of the property market. You're looking at it through the lens of a property investor going, I can see some opportunity in it. The flip side of that, and in this sort of housing crisis, rental vacancy is all-time low. Rents are spiking by the day. Inflationary pressures impacting all Australians' back pocket. There is a crisis for a lot of people. There's people living in cars. That's all that's bad, right?
Yes.
And we lean our government to help solve those solutions. But we're here to talk about property. And how property investors who are largely contribute most of the housing stock for renters in Australia can continue to do that and position in a way in which they can hopefully work towards a financial future. Let's before we get into the sort of stuff, what you see in yourself and your business Investors Dream, Sanjeev, can you just sort of recap where you are as a property investor? You've been investing yourself for some time, right? And you had a job once upon a time that wasn't in property investment, right?
That's right. Yeah, I was an IT engineer for a good 15 years. And so me and my wife property portfolio right now, we have 12 properties, 2 properties in India, which were the initial investment, and 10 properties here in Australia we have, which we started investing. Our first purchase in Australia was back in 2014. So yeah,
2014, so that's nearly 10 years ago.
Yeah, so
9 years.
9 years we have got now.
Okay.
10 properties.
And we spoke about that when you come ahead of Yarn. Where are the properties in India again? We spoke about it. There's no debt on them, right? They're completely paid off.
They are paid off, yeah. So they were the initial one, which I was not an educated investor at that time. So never knew how to leverage money. We were saving money, as an Indian, you can say. We're good at saving. And we just bought one residential, one commercial back in my hometown, Ranchi.
Okay.
Which
I have
is
no
like
idea where that is.
Yeah. So it's a capital, but it's a smaller town. And that's sparked me that, hey, can I do something like that, pay off properties in Australia? And that's where, a few things happen in life. I was getting busy with job and everything, and that's where I learned about something called passive income.
Yeah.
So that just sparked my mind, and I said, oh, what is that? And let's learn all about it. And that's where I got into the property. And since 2014, actually I started learning from 15, even though I bought my first property in 2014 here in Sydney. And since then, I've been doing a lot of renovations, smaller subdivision, 1 into 2, 1 into 3, building granny flats. So that strategy is, buying all those 400K properties, 500K, has now given me a good reward. Finally, eventually, I was able to quit my job with all the learnings and action. And now we have a portfolio of 7 million in Australia with a debt of 4.5 million.
Yeah, okay.
And I'm still craving for more debt. If I
bet
can.
you are. You just got to wait to the banks and can lend it to you. And I know I asked you beforehand, but I'd like to reconnect with it. What brought you to Australia? And by that, we're going through this process now. We're opening up our borders post-pandemic for skilled migration. We need to attract the best and brightest into Australia. And I don't know the subcontinent, India, and Pakistan and areas like Bangladesh are big, particularly India now. That some of it's in migrant numbers. India is pretty strong. So, how did you end up here? How did you and your wife end up in Australia? Did you come as students, or what's?
I came back in 2007. So I was sent by my company on a work visa.
Okay.
IT company. And then pretty much I came for a 6 months work project, and that 6-month project became 2 years. And then by the time, one of my company directors, he said, oh, it looks like nice. Everyone tried to retain their good colleague, team members who work hard, and that's the company, and they were also growing in Australia. So that's where I was retained. So they offered me a local job. So they given me a local visa. And then, similar time back in 2009, I got married. My wife was in India. So that's where she came back in 2010. And then immediately after, we applied for a permanent resident. And since then.
There you go. Are you a citizen now?
Yeah.
That's cool.
Me, my wife, and I've got a daughter who's 7 years old.
Wow.
So all are, of course, citizens.
There you go. It's funny how things work out. So you never sort of sat there and anything and I want to move to Australia one day. It's just you presented this opportunity and you grabbed it and went, okay, I'll do that.
True. Yeah. I never thought I'll be. And that's where initially when we, were in Australia, we were like, no, not sure. Sydney prices are so expensive. Rents are, that time also used to feel it's so expensive. I used to rent in Parramatta, and that's where we started buying in India. And then, fortunately started learning back in 15, and that changed my life forever.
It's crazy. Well, you should be congratulated. You must be proud of the journey. And it's a great migrant story, right? That is Australia. And Australia's been that for hundreds of years, sort of acknowledging the length of time Australia's been inhabited, our Indigenous people for 40,000 plus years, and, everyone sort of subsequent to that sort of migrant stories. So it's good to see it's still working and you're doing well, mate. And you want to keep going, you want to keep growing your own portfolio?
Oh, yeah, exactly. Yeah. I mean, that's what, I was looking at, and I was doing some numbers like, if you have market value of, say, 7 mil and my debt is 4.5, if I just stop investing anymore, and I'm doing a very conservative approach of 5%, then I'm looking at in 30 years, the same portfolio becoming 20 million plus.
That's crazy with the same level of debt.
Yeah, same level. And the debt is also reducing because most of the properties I'm keeping P&I so that I can look good in the eyes of the bank. Not that I want to pay the principal, but, I'm looking at next, I'm 43 right now. And I was planning for myself like, hey, if I become 50, what's my portfolio looks like? And that was, good 10 million plus.
Yeah.
So, in next 7 years, I'm just making 3-4 millions just doing nothing.
Yeah. And people listening just go, no, it can't work that way. Property can't keep going up. It's at its top. It can't grow any further. And what you're talking about there is, they call it, I think the eighth wonder of the modern world is compounding growth, right? So you're saying your portfolio growing at 5% per annum for the next 7 years would bring your portfolio value to $10 million, and then for another decade growing at 5% per annum. So compounding year on year, So you extrapolate that over 30 years, you've got a pretty large $30 million portfolio with $4 and a bit million worth of, well, less than $4 million in debt, because in 30 years it'll all be paid off if you're paying principal and interest. That's how property investment works.
Yeah, exactly. And if you like, even I'm not paying, like I've got properties in my portfolio, they have doubled it in 5 years. So that's like 20% plus capital growth happening. Again, the caveat here is you're not just buying anything, you're educated investors. So you're buying what 80-90% of the Australia population need, which is affordable accommodation, affordable house. I'm not buying $1 million houses. So that's my caveat, right? I'm buying 300-400K. And when I'm buying only houses with decent land size in a good regional centers or capital like Adelaide or Perth.
So you can still find properties for $300,000-$400,000 in Australia.
Yeah. I think.
Well, you know where they are, do you?
Yeah, I know, and I feel like soon we'll not have any more because the way like the construction cost has gone up by 20% almost in last 12 to 18 months, and maybe 50% plus in last 5 to 6 years. So if you're buying, and that's what we do, like buying a lot of 400K or even 500K properties, big houses, solid brick houses, which you can't build for that price anymore. So that's your main basic economics.
Yeah. So that's the sort of, your investment thesis, which is what you've applied yourself, right? You're just now trying to help other people do it through Investors Dream. Let's have a chat about where we're at with the market right now. We'll just go to a break beforehand. Stay with us for a moment. Back with the Smart Property Investment Show. G'day, welcome back. Phil Tarrant, host of the Smart Property Investment Show. Hope you're going well. Chatting with Sanjeev Sah, founder and director of Investors Dream. So Sanjeev, like if you're tuning into this podcast, pretty familiar with what's happening with property markets, the interest rate environment, the inflationary cycle we're going through right now, non-executive rate rises, bringing the official interest rate to the highest point in well over a decade. Most people now are paying mortgages mid-5s to mid-6s, and that's going to be the reality moving forward. I know a lot of people look at the refinance now and try and get sharper rates, or they're thinking about, like yourself, your point, sort of moving off principal and interest rate loans to interest-only loans to try and increase cash flow to help other parts of investing or just to maintain their properties. But give me a sense of the real challenges facing the property market right now, considering all these sort of macro and microeconomic factors.
Yeah, so see, of course, RBI is trying to increase the rate of interest, cash rate to control the inflation, but it may control a bit of it, but definitely not going to help the housing crisis what we have. And it's a pretty number thing. So what the data we have is like right now, stock level for the sales listings are pretty around 150K, a little over that, which is down which was back in 2010 and all. So you are like back a decade and we need more listing plus. So what it means is like you have the lowest level of listings in over 10 year plus. Now, recently with all the floods, we lost around 40,000 houses, which added to the crisis. We have got around average of 150,000 population adding to Australian naturally every year. They need houses. Construction cost has gone up. Of course, we all heard about students coming to Australia back. They need homes. We need a lot of people, immigration, right? You talked about skilled people. We need home for them. And we're already facing this crisis at the moment. Vacancy rate is nationally at 1%. Actually, it's under 1%, but let's say for 1%, right? Quite low. So that shows like it's a real problem. And of course, what it makes even worse is most of the big builders had to close their shop. They didn't complete a lot of the projects. And now we need those builders. And this is a problem where, the solution is to build more houses, right?
Yeah.
More roofs. Now these builders, and this is not an industry where you and me can go and take a builder license and start to build 100 of houses because it is a big opportunity. It takes time. So this is a real problem we have. And I don't see a solution. And of course, RBA increasing the rate of interest is causing even worsening the problem, especially the housing crisis, because it's throwing away the investor out the people like you and me would like to buy more properties, would like to do a smaller development, granny flat, we can't do it. Borrowing is tight, money is cheap. money is hard. So money is expensive. So what we need is a better policies by the government, because I don't think I'll blame that government needs to go and fix all this issue. It's not, but government can be a good project manager. They can enable better policies. Like, for example, if land sale is happening, don't charge the stamp duty on the land. Have a faster DA process. They can enable those, right, with their policies. Yeah. Those small things, enabling, building granny flats. In Victoria, you can't build a granny. You can build a granny flat, but you can't rent it out separately. What is the point of having those granny flats then? Smaller things, right? I'm not saying about big things. Those things can help. And of course, so that people, like any sort of investors, either they can buy houses, which will help with the housing crisis, and a smaller, a bit of sophisticated investors or a smaller developer, bigger developers can go and build houses at their level. Like, I've got 3 houses to build in my portfolio right now. I'm holding it off because what's happened last 2 years, we all know that with the construction. I've got 1 granny flat to build. I'm holding again because, I'm rather than I'll buy a 400K house rather than take a contract for 400K and build a 3-bedroom house. So these are the challenges. The point is, like, these are real challenges, and we don't see this solution happening, or even the government comes and enable these policies. It's not a one-day problem. ABS and AMP has already, in one of the reports, they have mentioned that we have around shortage of 160,000 houses in over next couple of years. So that's a real data. Now, someone has to build that. And right now, what I see is only who are really serious developers who have been doing from last good number of years, only those people are active. Rest, like even people like myself, I'm not doing developments.
Yeah. Because it's a risky business at the moment because you just don't know how long it's going to take you to get the property up and out of the ground, the holding costs connected with it, and whether or not at the point of completion you're going to get the valuation on the properties that you want, right? It's pretty risky for investors. And you keep talking about this sort of housing crisis. I just want to drill down in that a little bit. It's, a crisis gives a negative connotation, and for many people it is an absolutely negative environment. They can't afford rents going up. They're not able to do other stuff because they've got to continue to pay for rents. It's an issue because we're not going to be able to house new migrants, which could stifle the migration policies and the migration initiatives the government's trying to implement. It's a big issue because we need more houses built, but we can't get the builders to do it, and cost of materials is high. That will come down in time when this inflationary cycle sort of comes to an end. And you sort of point to a lot of these issues in that bureaucratic red tape around developments is still really, really tough at a local government level. Like every single person I know that's trying to develop complains about the DA process. And I know the New South Wales Premier was only chatting about it the other week about, I can't remember how many different hands need to touch a development application to be signed off by different parts of local governments. It just slows it right down and makes it just a quagmire of ineffective or inactivity on behalf of the people in charge. Like, this is a big issue. It's a crisis because it's structurally going to be very hard to fix. The recipients of the negativity around it are renters. But for property investors, they can't help solve the problem because they want to maybe develop more properties. It's difficult and it's risky to do it. But what is available to property investors is the fact that they can increase rents, to try and ameliorate some of the impacts on interest rate requirements and increase repayments. So I don't know your view of all this, Sanjeev. Like, is this crisis that we're in right now, number one, is it a crisis? Number two, is it something which is resolvable?
Yeah, I think what you said, I agree with you. With the government policies, the delays, right? Like I had one simple DA in one of the council for a small change of uses, which was a very straightforward. They said, it's straightforward, we'll do it. It's been sitting in the council for 3 months because someone is too busy to look into it and put their approval stamp.
So what will change the usage? What's the property? What's the asset?
So this is a property in Parramatta we bought last year, and it is in a commercial space, but this is in a low density. So generally, it's a residential property.
Okay.
And as an owner occupied, you can run business, no problem. The entire street is a business, but to lease out, if you want to do something, you have to get with the council. Just change it
from a residential to a commercial property.
Commercial, yeah, which is a very straightforward because the whole and the council knows that there has nothing to change. It's just a piece of paper. And they're happy to do it. Everything is because it's in a heritage area as well. So because of that, they give you permission to run business. It's allowed. It's in the entire
Because you can't change a property because it's in a heritage area.
Correct.
Yeah. Was this in a Parramatta CBD? Is it one of those sort of older
Yeah, in the
houses?
Harris Park, actually.
Yeah, okay.
So,
yeah.
So it is a house with the land, and, we apply there, and the council say, it's straightforward. We're going to approve it. We'll put a small condition. Just maintain the facade. Do something,
And what do you want to do? Like turn into a doctor's studio or something or other like that?
Yeah, I think, a property, probably, we'll see it, but plan is to convert into a property hub so that we can have, accountants, solicitors, a mortgage broker, those sort of thing.
Yep.
And, it's going to help our business as well. So that's the plan. So otherwise, we can give to any other business as well as office space. But 3 months time, right? It's too much. I mean, and so that kind of issues.
So if you called up, say, can you just sign it? They're going, we're too busy.
Yeah, I mean, they themselves called me and said, Sanjeev, I've looked into the thing. It's going to happen. We'll approve by 7th of Feb. And, so it will be done. But if you don't get it approved, give me a call. I called them on 8th. And, still no response, nothing.
Yeah.
And first of all, why, they knew they're going to approve. It's a small piece of work. But then why it's taking so long, right? And this is just an example where you don't have to approve or look at any plans. It's just within the policy. It's just a piece of paper which we have given. All they have to say is approve, right? Put in the database. And I'm talking about the most simple form of example here. So, and this is again, other council are better than others. It's all varies. But yeah, otherwise, I think that's what. So this.
Well, you're not alone, mate. Like everyone has the same gripes.
Exactly. So
I acknowledge the hard work people in the council do and stuff as well. But yeah.
And that's what I'm talking about. If the government comes and fix these problems, and people are getting paid to do their work anyways, right? So it's not like we are understaffed or not. People are paying, but these challenges. So to me, problem is real, but then government is not looking at these smaller things to fix it up and talking about, hey, we're going to build big houses, number of houses to fix this crisis or the shortage of housing. It's not going to happen.
So it's a challenge, but for smart, shrewd, connected, informed property investors, there's probably ways in which to navigate it. So let's have a chat about that. We'll go to a quick break though. Stay with us, back in a moment. Welcome back, Phil Tarrant from Smart Property Investment with Sanjeev Sah, founder and director of Investors Dream. You're tuning into Smart Property Investment Show on the Property Investment Podcast Network and on YouTube and wherever else you can watch the videos. Are smart investors understanding these issues, understanding the dynamics of the problems facing it and trying to find a positive outcome that, number one, benefits themselves, and number two, in whatever order you want to put these in, benefits renters? What are you seeing? What are you recommending to your clients as the best way to sort of advance in this particular market, Sanjeev?
See, is to just buy these affordable houses in the range of 3, 4, 500K, 600K as a max. All those houses in high growth areas where there is already low vacancy rate. It's pretty much everywhere, but in good areas where there's a lot of infrastructure, there is in established areas, and reap the rewards because these prices are going up automatically. And because RBI is raising the rate of interest and we know the real problem, which government is not even looking at it, and then media is putting all the negative news. So automatically you don't have to even do the hard work. Just buy the property. Maybe the RBI will increase the rate of interest. Maybe you'll out of pocket $1,000 or $2,000 or $3,000. And I'm not promoting to buy a negative gearing. I'm against it. But we can't change the RBI decision, the environment we are. So yeah, you might be a couple of grand negative, but it's temporary. But then growth is like, 10% happening. I bought, 2 properties last year, 6 months back. Now already I've seen 10% growth on those 500K properties.
Isn't probably going backwards in Australia is what your media is telling us at the moment?
Yeah, that's what I'm asking them. Like, tell me those suburbs, I'll go and buy them. So backward is going, but it's only the big dollar, right? We're talking about a couple of $1 million houses, either in Sydney, Melbourne, big dollar going back. And that's playing with your median also. Because here, 400-500K property going up, but then suddenly think about like a $5 million property going by 20%. Suddenly the median changes, and that's where media is promoting that, hey, look at the national house prices gone by 9 or 10% down. But on the ground level, you talk about, and Phil, you know that, Tasmania, last 5-6 years of growth happening. Now, bit of plateau, still prices going slightly up. Adelaide, we know, going up. Go to Perth, going up every day. It's hard to, and all these locations, it's even harder to buy properties. Go to regional Queensland, same story. Even Brisbane, right? Going slowly now after 40-50% of growth in last 2-3 years. New South regional, everything has become a 500 market, a decent ones. Prices still going up slightly, slowly. Sydney and Melbourne is where, and again, in Sydney and Melbourne also, if you're buying a $800-900 million property, that's still pretty strong. So the only down is your couple of $1 million properties. And of course, and we know the reason, because money is expensive.
Yeah. What you need to do, in my recommendation, look under the hood, right? Like, don't subscribe into this notion that all property is going down in value. There are some areas of Australia which is still going up in value. It's about where your price point is. Being a discerning investor, people's ability to borrow money is certainly curtailed at the moment. So it's changing, I guess, the type of property people are investing in, and therefore they're probably being attracted to more of the properties you're talking about, which are in areas outside of Sydney. And you talk about Perth. So we've been chatting a lot about Perth lately. There's a lot of people out there being active in it. Well, got any specific suburbs for us where you like at the moment, Sanjeev?
Yeah, I think so, if you can buy in Perth, it's still good deals. Buy in Rockingham, Mandurah areas on the south side, pretty much, coastal town, nice, beautiful lifestyle. And still you can buy under 500, $500,000. So, and these are the suburbs, actually. You can go and live yourself. I bought a property in Secret Harbour, for 505. Good suburb,
And when are you going to buy next? What's the plan?
Next will be happening this year.
Okay.
So,
where, what? You know yet?
No, I've not decided on the location. I think even my borrowing is now tight. So again, I'm working with my mortgage broker to see. He's saying, you're buying a lot of properties, so don't keep coming with the contract. Give me some breathing time.
Yeah.
But yeah, I think this year I'll be buying. I think maybe not in the first quarter. Maybe in the second.
Are you refinancing the current portfolio to raise deposits, or using cash?
Oh yeah, no, I'm. So last year I refinanced. I think I took out around $500,000. So $300K is already invested.
Okay.
And $200K is kept aside.
Ready to go.
So ready to go. Yeah, bit of buffer. Let RBI increase the rate of interest. And that's the thing I want to talk about. Like, say, even you have got a 5 million or whatever portfolio, and the debt is on a 5 million portfolio, debt maybe like, say, 3.5. Even at 5%, you're making $250K. $500,000 and 5 million, 5% is $250K. And even you lose $30,000 or $40,000 in interest, you're still better off making $200K as your wealth on the side. And 5% is very conservative. And I feel like, and we have seen those 20-30% growth for people who are educated investors. And I feel like this year also we'll see easily double-digit growth.
Where?
By I think in Perth market, in regional Queensland. It's a shortage, right? So, look at Rockhampton now. I'm giving a location. It's happening. You can buy houses around for $400K mark, 4-bedroom houses, double bath, brick veneer with extra media or something. Nobody can even build those houses for that price.
Yeah.
And land is not free for sure. And the rents are already getting $480, $500. So yeah, I think it's a lot of opportunities there.
Okay. And if anyone wants to have a chat with you and sort of explore this further, what's the best way to touch base?
Yeah, they can go to our website, investorsdream.com.au, and there's a book a call button. They can schedule a call and then have a chat. Otherwise, yeah, I think they can go to our, there is a tab called education. They can subscribe to that as well. And I'm happy to give them, few of the listeners for free,
that's cool.
Which we provide to our clients. So our generally part of the process when people sign up, first thing we do is we give them, it's a 3 hours content recorded by me to explain, educate them that, hey, what sort of properties, what is the game all about, why the importance of goal setting, understanding, knowing what you want to achieve. And it's okay when, we all start with somewhere, and it's okay to not understand everything in one go, but that is something you have to start learning and educating
You've got to learn, and you've got to remember 90% of winning is beginning, right? Unless you don't get started. And you should start with education. And for our listeners here, the fact they're tuning into it means they're on that pathway already. But what was that website again? Where do they go?
Investorsdream.com.au.
All right.
And there is a tab, education. So they can subscribe there. And we're happy to give them, for these people, the email will come and then we can register them in the system and then give access to the login so that they can watch the content and get educated.
There you go. Well, thanks for coming and having a chat with us and giving our listeners a greater sense of what's going in property. I think people need to sort of calibrate their view of it all. I think you made some very good points in relation to just how tough it is for there's many different factors shaping property markets at the moment. It's pretty dynamic when you look at hiking rates, increasing rents, increasing inflation. Is a very unique market we're in right now, and it will become normalised, and it's definitely on its way there right now. But next time you buy something, come and tell us as well.
Yeah, definitely, Phil.
Nice one. All right, thanks. So that's Sanjeev Sah. He's founder and director of Investors Dream. It's good to get him back in the studio. I hope you enjoyed that, everyone. Remember to check out smartpropertyinvestment.com.au, social media, Smart Property HQ. We'll see you again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Have you signed up to HR Leader? Go to hrleader.com.au to subscribe. Receive the latest HR and people leadership insights and news.